this is Matt on the Moon Lambo channel. Not surprisingly, the Fed did hike rates yet again today, which is expected, frankly. It resulted, though, in XRP jumping in price along with the broader crypto markets just globally, and stocks through the roof today. Fascinating times we live in, and so I want to share with you, and I'll tell you this right here at the outset. It seems increasingly likely, according to analysts that I follow, that really the bottom is in here. In fact, I'm going to highlight somebody who has about 5 decades of experience on Wall Street. He said something I found to be very interesting. He thinks that the bottom is in 2, and he wasn't talking about crypto, but that's still super interesting to me because crypto moves in tandem with the stock market. In a general sense, not down to the second day of the week, the month, so on and so forth, not necessarily anyway. But in particular, for the bigger moves, it's very obvious how much they align, including today, because this was based on news. This is not about fundamentals. The fact that you've had XRP on sale for however long now, it's not because there's something wrong with XRP. That has nothing to do with it. It has nothing to do with XRP fundamentals. It's just cheaper because people are fearful and emotional animals, and they don't know what the hell they're doing with their own finances, which is kind of a scary thought. But I want to share with you perspective from a number of individuals on this topic in this latest Moon Lambo hot jam. But it is good to see prices going up. I mean, frankly, though, I'm weird. I'd be happy even if they went down like, ooh, maybe I buy more. But I'm the weirdo. Before going any further, I do want to be clear that I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. Now, as I record this, XRP's at 35 cents, Bitcoin's at $22,764. Market cap for the asset class back over $1 trillion, and Bitcoin dominance at 40.84%. Now, for those of you looking at the screen, you may notice that almost everything, I'll just scroll down how many cryptos are on this screen, almost everything's in green. And some coins by a lot. Some coins over 15% up within the last 24 hours. Bitcoin's up a little over 7%. Ethereum's up almost 12%, although at one point it too was up over the last 24 hours, over 15%. XRP's up almost 6% over the last 24 hours. It's good to see, right? If you want things to go up, as most of you do, good day. Do your happy dance, right? And it's just so interesting to see how things lined up. And so here's the 24-hour chart for Bitcoin, and you can see right as the FOMC meeting got underway today. So that is a Federal Open Market Committee, setting monetary policy for all of us. As that got underway, markets just started spiking. Like they ended up liking this news. So that's XRP 24-hour chart. Now let me show you a 24-hour Bitcoin chart. That's what's on your screen now. Same damn thing. Looks like the same damn chart. Again, but say that should make you feel better, don't you think? Like, if you're worried about the long-term viability of this stuff and you've been scared as XRP price has gone down, can't you see here, plain as day, that it has nothing to do with long-term viability? It's just people being idiots and panic selling stocks and crypto because reasons? Like, it could not be more obvious. To me, it just instills confidence. Now, here's the Crypto Fear and Greed Index, was just updated a little over an hour ago, at least at the time that I'm recording this. It's at 32 out of 100, so you can see in the world of crypto, people very happy with what's been happening, so it's not surprising to see that it's up today. So market participants, yes, still in fear, but up from 28 out of 100 yesterday to 32 out of 100 today. And take a look at this article from Business Standard. Fed raises rates by 75 basis points to tame inflation, flags weakening economic data. So 75 basis points, that's 0.75%. That's the equivalent. Federal Reserve officials raised interest rates by 75 basis points for the second straight month, and Chair Jerome Powell left the same move again on the table for the next meeting in September, depending on how the data comes in. Policymakers facing the hottest cost pressures in 40 years lifted the target for the federal funds rate on Wednesday to a range of 2.25% to 2.5%. That takes the cumulative June and through July increase to 150 basis points, that's 1.5%, the steepest since the price-fighting era of Paul Volcker in the early 1980s. So we haven't really seen this, certainly not in my lifetime. I mean, I was born in '83, so I wasn't exactly aware of what was going on, let's say, back then. But this is something new for so many people listening to this channel. We just haven't lived through a time period like this. And I know that some of you have that are listening, but it's just like crazy, the degree to which inflation is just completely out of control. And that's why, of course, as I've said before, this is obviously the reason that they're raising rates to slow down economic activity. Like they don't want to word it like that, but that's the result of this. The more costly it is to borrow money for any purpose, the fewer people there will be willing to take on that much additional risk, even if it's just a little bit. 75 basis points, fine. That's going to take some more people out of the market. Less economic activity, and so fewer dollars chasing goods, which should slow down inflation. Like it actually legitimately should. I don't know for sure, how many rate hikes you're going to need to have to get the desired effect. But we're still, even with this, we're still at historically relatively low interest rates, so we'll see here. But just because rates go up, like it doesn't mean that we're going to see that instant result. And also, it doesn't mean that this somehow magically fixes the economy. It's highly likely that, because we're going to get more data tomorrow, it's highly likely we're in the technical definition of a recession. We'll get that tomorrow. Is that going to spook the market? I don't know. I legitimately don't know. I don't know. But I do know it doesn't matter. So if it's the market gets spooked and goes down, okay, another emotional thing. Market gets excited for some reason or doesn't do anything, okay, cool too, I guess. It doesn't actually matter for people that understand that it's purely emotional. Like if you can just wrap your head around that, you can sleep easy at night, regardless of what the markets are doing. So for the people that are truly thinking long term, this is not a big deal. But I'm not the only one that obviously recognized this. Here's a headline from You Today. Breaking: Bitcoin surges to intraday high after Fed rate hike. I'm not going to read the article. I'm just pointing out, this is just what happened. This is what everybody's been talking about. And I want to share with you this tweet from my fellow XRP YouTuber, the Blockchain Backer. So after the Fed meeting started this afternoon, this is around 2:28 p.m. Central Standard Time, he tweeted out the following. Markets have been broadly ripping to upside for the last hour since start of Fed meeting. Today, Dow Jones plus 529, NASDAQ plus 537, S&P plus 110, Bitcoin plus $1,650, ETH plus $150. Ethereum has reached back to and fighting the final retrace level of the final. I'm sorry, I made that full screen and threw me off. Ethereum has reached back to and fighting the final retrace level of the last week's price action. So here's the chart that he showed. This is an ETH USD chart. And then there was also this from TXMC, and I'm a fan of TXMC, formerly with Glassnode, and I'm a fan of Glassnode too, all the on-chain analytics stuff that they're doing. I find it fascinating. There are a lot of good firms out there. There's Chainalysis, there's Santiment, there's Glassnode. I always look forward to stuff from all those guys, which is why I'm always happy to report stuff they share on my channel. But anyway, TXMC wrote the following. Referencing the Fed meeting, he wrote, FOMC days all year have had whippy swings. With risk pumping this morning, it sets up for an intraday reversal later when the press conference begins and everyone remembers the score. Q2 GDP tomorrow likely confirms technical recession. Weird spot for bulls. Yeah, so this is an interesting time, right? Because now we have the benefit of hindsight. We know, because he tweeted that at 9:50 a.m. Central Standard Time, hours before the meeting started. Well, we have the benefit of hindsight, and we know what happened. Prices just started pumping. Stocks and crypto, having nothing to do with fundamentals or anything like that. So the question is, what's going to happen tomorrow? Now, that I'm curious about, because it seems like a virtual certainty that we will fit the technical definition of a recession, which the White House is trying to redefine. Go figure. But, if you're talking about two back-to-back quarters, which is what's pretty much always been since like 1974, that's what people talk about almost exclusively. That's what they track in terms of a technical indicator. Probably the case that we're going to find that the actual final data will indicate that's the case. So, again, I don't pretend to know what's going to happen in terms of price action tomorrow, but I'm warning, like, even if price goes down, I just don't think it makes any damn sense to freak out about it. Just saying. And then there was this from David Hunter. He is the Wall Street guy with about 5 decades worth of experience that I referenced at the beginning part of the video. And check this out. Because he's not even talking about crypto, but again, you know that crypto follows stocks. So this matters tremendously. Check this out. He said, no matter what, and oh, by the way, this is 10:05 a.m. this morning, so this is before the news of the Fed, from the Fed raising interest rates 75 basis points. And he said, No matter what the Fed decides today, 75 or 100 basis points, the market is poised for a move higher to S&P 4150 to 4200, and then maybe a sharp short pullback to 3800 before a much bigger, more sustainable rally to 6000 gets underway. The lows are in. The market not likely to undercut the June lows. Interesting. And he shared that with his, what he's got here, 186,000 followers. So he's a respected individual in finance, and that's his professional opinion. Lows are in, folks. Well, if they're in for stocks, they're probably in for crypto. Unless we have more of that contagion people are talking about, which started with the whole Luna fiasco, putting a bunch of firms out of business, including 3 Arrows Capital, all that jazz. Unless we see more contagion effect, that could result in something. But even that doesn't seem likely. It looks like everybody that was going to fail, by and large, they've pretty well done it to this point. I mean, fine, admittedly, we could get a surprise, but don't necessarily count on that being the case. It doesn't seem as probable with how much time has passed already. And then there is this from chart analyst Income Sharks. Hashtag Bitcoin. Doesn't get much better than this. We got the drop as I should tell you the time. This was 1:28 p.m. today. Doesn't get much better than this. We got the drop as expected. Everyone flipped bearish as expected. Now both of the recent spot buys are in profit. Now that the volatility is out of the way, we can proceed with the midterm rally. See you at $30,000. So he's another analyst. He thinks that the worst is out of the way. And we are going to see Bitcoin this year pump up to $30,000. And in fact, he thinks that we could see potentially quite a bit higher by the end of this year. I've been highlighting this stuff on the channel for some time now. So we'll see what happens. But to me, as far as I'm concerned, like I kind of have a similar feeling as I did in December of 2018 when we were at the bottom of the bear market. It's like we didn't know for sure that was the bottom back then either. But it's like, well, how much more brutal can it actually get? And the answer was it couldn't get more brutal. Everybody that was going to get out of the market, they were out of the market by then. So eventually there really is a bottom. And it kind of feels like that. So we'll see. There's no way. And it is a different time. I keep acknowledging that too. There could be some sort of wild card incident too. What if there's another pandemic? Like you had March 2020. That caused a massive drop, obviously. And then with just how tumultuous the state of economies around the world like it actually is. Who knows? Okay, so I'm always allow for that, some sort of wild card incident. But outside of something like that, my hunch anyway is that the worst actually is behind us. We're just gonna have to sit back and find out together. Nobody knows for sure. If anybody tells me they know for sure, just run from them and don't trust them because nobody knows for sure. But I'm feeling pretty gosh darn good about all of this. I'm not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.